Good morning, capitalists. Here is everything you should know today. Hello, capitalists. Here is everything you should know today. Trump launches product of USA label. Trump admin redirects $928 million from wind to oil. Toyota invests $1 billion in U.S. plants amid tariffs. U.S. to boost diesel supply as prices hit $5.29. EU faces higher tariffs if trade deal fails. BlackRock's Larry Fink. Stay invested, avoid market timing. Elon Musk launches Terafab chip venture. Moody's downgrades. KKR private credit fund to junk. Apollo private credit fund limits withdrawals to 45%. Today's Markets Plus Assets, sponsored by Health Sciences Institute. The Dow Jones Industrial Average is at $46,146.50, down 0.09%. The S&P 500 is at $6,555.93, down 0.36%. The Nasdaq Composite is at $21,739.20, down 0.95%. The volatility gauge rose. CBOE VIX is at $27.02, up 3.33%. The fear meter is creeping back above yesterday's calmer levels. Precious metals are mixed. Gold is at $4,396.50 per ounce, down another 0.23%. Silver is at $69.45 per ounce, up 0.14%. The lone green asset on the board. Bitcoin reversed hard to $69,160.80, down 3.35%. Another day. Another set of moves that scream policy in action. The Trump administration rolls out a strict new product of USA label for meat, poultry, and eggs. Born, raised, harvested, and processed entirely here. It redirects nearly $1 billion from offshore wind leases straight into oil, gas, and LNG. Toyota doubles down with a fresh $1 billion in American plants. Diesel prices hit $5.29, and the response is more supply, not less. Meanwhile, private credit shows cracks, downgrades, redemption limits, and on the builder side, Elon Musk launches Terafab to chase terawatts of AI chips. Larry Fink reminds everyone, timing the market is a loser's game. Let's cut through the noise. The Trump administration launched a national campaign for the product of USA label, reserved exclusively for meat, poultry, and egg products, where the animals are born, raised, harvested, and processed entirely in the United States. This is the true American standard. Voluntary USDA label with strict documentation. No foreign ingredients, no imported livestock. Producers must keep full traceability records. USDA will verify compliance to rebuild consumer confidence and support American farmers and ranchers. In energy, the Department of the Interior reached an agreement with Total Energies to scrap Biden-era offshore wind leases in the Carolina Long Bay area and New York Bight, redirecting $928 million into U.S. oil, natural gas, and LNG production. Total Energies will invest in a liquefied natural gas plant in Brownsville, Texas, plus shale gas and upstream conventional oil in the Gulf. All large-scale offshore wind leases under construction are now paused on national security grounds. Interior Secretary Doug Burgum called it a win for affordable, reliable energy and grid reliability. Toyota announced a $1 billion investment to boost production at its Kentucky and Indiana plants. $800 million at Georgetown for more Camry sedans and RAV4 crossovers, $200 million at Princeton for Grand Highlander SUVs. This is part of a plan to invest up to $10 billion domestically over the next 5 years, tied to its philosophy of building where it sells. Toyota was the first Japanese automaker to commit to exporting U.S.-produced vehicles to Japan. Energy Secretary Chris Wright said the administration plans to bring extra diesel to the marketplace soon as prices surged about 40% to $5.29 per gallon amid the Iran war supply disruption. The U.S. will release about 1 million to 1.5 million barrels per day from the Strategic Petroleum Reserve. Emergency releases possibly reaching nearly 3 million barrels per day total. More than 30 nations agreed March 11th to inject 400 million barrels globally, with the U.S. contributing 172 million. Wright noted blocking exports would hurt refineries and that markets need price signals to produce more. On trade, U.S. Ambassador to the EU Andrew Puzder warned that if the EU-U.S. trade deal fails, the EU faces higher tariffs while nothing changes for the U.S. The pact sets a 15% ceiling on most EU goods in exchange for eliminating duties on many U.S. products, with a sunset in March 2028. BlackRock CEO Larry Fink warned investors against market timing, missing the 10 best days in the S&P 500 over the past 2 decades would cut returns by more than half. He noted the old model of global capitalism is fracturing as countries push self-reliance in energy, defense, and technology, with AI wealth flowing mostly to existing asset owners. Elon Musk announced TerraFab, a joint venture between Tesla, SpaceX, and xAI to build advanced semiconductor production at Giga Texas in Austin. The facility aims for more than a terawatt of AI computing power per year, driven heavily by Optimus humanoid robots targeting 10 million units annually requiring 20 million chips. Initial costs, $20 to $25 billion pursuing 2-nanometer process technology. Musk highlighted current AI output at roughly 20 gigawatts per year against massive internal needs. Finally, Moody's downgraded FS/KKR Capital Corp to Ba1, junk territory, citing rising non-accrual loans at 5.5%, a net loss of $114 million in Q4, and only $11 million net income for all of 2025. Software makes up 16.4% of exposure. Shares dropped 4% and are down more than 30% this year. Apollo's $15 billion private credit fund will return only about 45% of requested withdrawals after requests hit 11.2% of shares, exceeding the 5% quarterly cap, returning roughly $730 million while protecting long-term value. NAV declined 1.2% over 3 months. Software is 12.3% of the portfolio. These stories cluster around a clear preference: domestic production, energy security, and rewarding builders over legacy green mandates. The Product of USA label ends the old loophole where imported animals could get the claim after minimal U.S. processing. Now it demands 100% U.S. birth-to-table with traceability, voluntary but verifiable. The White House is pushing it hard for transparency and to back American ranchers. Energy redirection is even more direct, terminating those wind leases and handing Total Energies its $928 million back so it can pivot the capital into Brownsville LNG, Gulf oil, and shale gas, sends a blunt signal. National security pause on large-scale offshore wind. Burgum framed it as lowering costs for families and strengthening baseload reliability. Toyota's billion-dollar commitment, $800 million in Kentucky, $200 million in Indiana, fits the same pattern. It's long-term, explicitly building where we sell and buying where we build, even as the company flagged 1.4 trillion yen in tariff costs for its current fiscal year. Export plans to Japan are advancing. Diesel at $5.29 triggered the supply response. SPR releases coordinated IEA action and Wright's stance that markets should signal production rather than face artificial export curbs. Price signal view is explicit. Prices haven't risen high enough yet for meaningful demand destruction. On the cautionary side, private credit is flashing yellow. KKR's FS fund hits junk with software-heavy exposure and weak profitability. Apollo's fund enforces the 5% redemption gate, returning PRODS-rated liquidity, while NAV still beats the leveraged loan index. Both point to asset quality pressure in a higher-rate, geopolitically tense environment. Fink's reminder lands here. Staying invested has historically beaten timing, even when strongest days came amid unsettling headlines. The fracturing of global capitalism and AI wealth concentration add layers. Self-reliance is the new game. Musk's TerraFab is the pure builder play. Massive scale at Giga Texas to solve internal chip shortages for Optimus and AI compute. From 20 gigawatts today toward terawatts. 2 nanometer tech, $20 to $25 billion starting cost. Demand driver is clear. 10 million robots a year need 20 million chips. For capital allocators, the signals are pragmatic. Domestic labeling and manufacturing commitments reward traceable U.S. supply chains. Ranchers, auto plants in Kentucky and Indiana, LNG in Texas. Energy redirection from wind to oil/gas/LNG prioritizes reliability and cost over prior leases. Diesel supply response leans on markets and reserves rather than demand suppression. Private credit stress in software-heavy portfolios suggests selectivity. Liquidity gates and downgrades are real, yet some funds still outperform benchmarks. Fink's data point is blunt. Missing the best days kills returns, especially when headlines around geopolitics, tariffs, and disruption dominate. Musk's move is the counter. Bet on builders scaling AI and robotics hardware where others face shortages. The through line is execution over rhetoric. Produce here, redirect capital to reliable energy, stay invested through volatility. That's the play. Your move. That's the roundup for today. You now know more than most people do about what is going on in the world of finance today. Thank you for listening to The Capitalist and supporting us. Together we will make capitalism great again.